What's up, guys? Welcome back to DCA. So tonight what we're going to do is take a look at a few metrics that I'm actively watching as Bitcoin has dropped back down to around $38,000. So early in February, we got up to $46,000. We came back down a bit, tried to get back up to that level again, and sort of got stuffed around the $45,000 level. So what I'm going to do tonight is show you the things that I'm watching, what I'm concerned about, and what I will be watching continuing from here on out. So what we're looking at here is 30,000, 35,000, 40,000, 45,000, 50,000, etc., all the way up to the top. You can see how many coins are held at each level, okay? And this shows the corresponding price at the time. Now, what we saw on this chart is that there are a large number of coins held at this just above $45,000 level. So we knew that, and we discussed this in the prior video, that if we come back to this $45,000 level, we're probably going to meet a large quantity of resistance there. And that's exactly what happened. We came up, got very close to 45K, and right at that level is where we got rejected, back down, heading down actually below the $40,000 level now. Now, what you'll also notice is there was a large number of coins being held right at around $41,000. So to lose that level, to lose the $41,000 level is a bad sign. All right. So, we can see the range of prices, and we just discussed how if we get rejected off this level, we're going to hope to hold this $41,000 level as a level of support, which we so far have been unable to do as we've fallen below it. Now we're going to take a look at some other metrics today that I'm watching, and I'm going to show you what it is that I'm concerned about. And these are things that, if you're new to the channel, we have been talking about for weeks and even months now. Ever since we dropped below the 20-week moving average, we have been discussing these metrics and saying that historically speaking, this is a very bad sign. And in general, Bitcoin has held to its historical trends very closely, even as we've went into this newer market cycle in 2021. Now, one aberration that we did see this market cycle was the ability to get up to a new all-time high in November, which happened on very low volume, very low user participation. Typically when things happen like this, there's some element, and this is a word that I hate to use because it's literally become a meme on YouTube, but typically when we see a price take such a large move on such low volume, it's generally secondary to at least a degree of manipulation. So we're going to look at supporting evidence for that. Anything that I say on this channel, I always back up with data. Lots of other channels just say things, and that's fine. Let them say things. You want to be an informed investor, so that's the goal here. So the first thing we're going to look at is the price volume. And before I get into this, all the indicators that I'm going to show in TradingView are generally available for signing up for free on my Discord channel. So if you want to go and recreate what I'm looking at, and that way you can see for it yourself and make your own inferences, you're free to do that. If you head over to the Discord channel, you can sign up for it there. This is the price volume, and all this metric is actually very simple, but in my opinion, it's very important. The price volume is simply the price multiplied by the volume. Now, why would you want to look at this? And the reason you want to see this metric is because it tells you how many dollars are being traded on the asset, approximately. The reason volume is not a good metric for cryptocurrency is because the price fluctuations in cryptocurrency are so severe that you actually can't very accurately compare volume. So when you see a volume spike, it may not mean much because at the end of the day, it's all about the number of dollars that are being traded on the asset. So for instance, when you're just looking at volume, we're looking at Bitcoin's entire price history here. And what you can see easily is that volume levels were, for instance, much higher in 2012, 2013, and even in 2018 than they are now. So when we look at Bitcoin's price volume history compared to what we saw here, its actual volume, the number of dollars being traded per day on Bitcoin, it's not even in the same ballpark, in spite of the fact that if we go back, there was much higher volume being traded back in its early history. So the reason for that is when the price is lower, if if Bitcoin costs $10, for instance, a $10 Bitcoin, $100 traded on Bitcoin will get you a volume of 10. Whereas when Bitcoin is $1,000, for instance, $100 traded on Bitcoin will get you 1/10 of a Bitcoin, or the volume will show zero point 0.1. So this is why price volume is a much more accurate indicator for looking at Bitcoin. And now if we bring this onto a log scale, I'm going to show you why this metric is so important. So we're just going to look back at Bitcoin's price history, and I'm going to show you how correlated the price of Bitcoin is with the number of dollars being traded on the asset. So you can see that in each instance, when we are making a peak, okay, so the first two peaks that we had in 2013, so there and here, notice that our price volume is peaking at the exact same time. When the volume begins to trail off, okay, we see the volume dropping off, flattening out, and then moving sideways. What's happening to our price? Our price is continuing to fall throughout the bear market, okay? And this corresponds to our price volume. Now, notice, right when we start to pick up steam in the number of dollars being traded on the asset per day, what happens to the actual price? And we see our price moving up all the way to our peak in 2018, which non-coincidentally occurs right as the price volume is peaking. So when this peaks, this tends to be when we see our price peaks, because it indicates retail FOMO, or retail interest in the market. It doesn't have to only mean retail interest, but these times tend to be when we go parabolic, is when retail market gains interest in the asset. And you just see that in 2019, it happens again, and then again in 2020 into 2021. When our price volume is very high, our price is moving up, and when our price volume is weak, it means a lack of general interest in trading the asset, and our price tends to fall. Now you see here, when we reached 69K, where was our price volume? It was approximately 43% down from where we were back in the beginning of 2021. And this generally is not how it works. If you go back in all of Bitcoin's price history, and if you go back and look at, you can use this same metric on any asset. It's not limited just to Bitcoin. If you go back and look at other assets, the same thing plays out. When the price volume is higher and moving up, the price tends to be moving up. When it's moving down, you tend to be going down in price as time goes on. And it's what we've seen in every market cycle. So we had this aberration here that started in July, where we went to a new all-time high in spite of the dollars being traded on the asset being significantly lower than they were just several months prior. The second thing I just want to quickly mention about the price volume is this. If you note what's been happening ever since we've started to come down here in December, into January, we reached our lowest points here at around 33K. We have not seen any significant return to normalcy in the price volume in terms of what we would expect to see in the setting of a bull market. In fact, if we go back to 2018 quickly, we saw the price volume just continually drop as we headed into the bear market. And even though the price volume was dropping and continually dropping, you saw these rallies. These rallies would occur. In fact, we saw not just one example of this, we saw 1, 2, 3, 4, 5, and perhaps a sixth event where we were seeing these rallies then get aggressively sold off, right? And that's exactly what you're seeing right now. What we're saying is, if you're seeing the dollars continue to flee from the asset, and we're seeing risk-off behavior continue to proliferate, I think you're going to see a place where it's going to be very difficult for us to start to move back up. Now, the last thing I would like to quickly show you. So this is the number of active users on the network in white, and this is the price in orange, okay? So obviously you can see, again, just like our price volume, there's a high correlation to our price and the number of active users. And it just makes sense. If you're running a store or you're selling something, if you don't have customers, you're not going to be able to sell anything, quite frankly. It's same thing with Bitcoin. If you don't have active users, if the active users are continuing to drop, you're going to see the price drop. In fact, if you just look at where the active users are, we're back at the same place that we were at the low in November, and then even back to July, essentially. All right, so late July. And then if you really go back, we're at the same places that we were at the end of 2018. So the number of users, and again, this can broadly be thought of as the number of people using the network each day, is dropping. And as long as this is dropping, don't take my word for it. Just look at the data here. As the number of users drops, you see a commensurate drop in the price. Okay, so remember, price is in orange, the number of active users is in white. And again, guys, if you don't like what I'm saying here, you don't have to watch the channel. I have a vested interest in Bitcoin going up. Okay, I am bullish on Bitcoin long term, but at the end of the day, okay, these are the facts on the ground. And to ignore them is to say I only want to have my preconceived notions confirmed, and I will reject all other information. Okay, so what I'm doing is showing you the active state of the network, the active state of interest in investment in Bitcoin. Okay, the last thing I'll show you is sentiment. So what we're looking at here is the Google Trends page for Bitcoin. All right, this basically shows you how often the asset is being searched. So if you're unfamiliar with things like this, it gives you a very good idea of how much interest in the asset in the general public there is. Okay, so if we look, what we see is this is very close to resembling a price chart for Bitcoin, with obvious, there will be drastic increases at certain times that may not exactly coincide. In fact, we also tend to see spikes in interest occur during times of capitulation. So we see this peak back in July of 2019. So we're talking right here at this 2019 mini bull market. Then where does the interest really pick up again? So January of 2021. Well, we all know what that is. That's when we were hitting around 40K, okay? Then we had more interest, through February, and then again here in May when the price was crashing. So you have high interest when the price is going to new all-time highs and when the price is capitulating. So 2019, we had been in a bear market for about a year and a half at that point. And while the interest didn't become rampant because of the fact that we never even went to a new all-time high here, there was some interest. But one key thing to note, where does the public's interest always become highest? And we can actually go back farther here. Where does the public become interested in the asset? Notice that they become interested in the asset. So December of 2016, right at the end. Then in July of 2019, right at the end. Then in January into February of 2021, again, nearly right at the end. So this is why, being one of these people, if you're still around in the market, again, this is not financial advice, but I think this should point the fact out to you that, fleeing now, forgetting about crypto now, tends to be the worst thing you can do. While you may suffer short-term losses, and when we're saying short-term, we're talking about, in crypto anyway, on the order of a few years, these are the best times to invest. Let's just look here. So the public has had the lowest interest from April of 2018 all the way through, let's just say September here of 2020, because it started to pick up in October. So April of 2018, so right about here at a price of $7,000 until September of 2020 at a price of around $10,000 up to $12,000. So imagine if you were investing in Bitcoin anywhere between a price of $7,000 all the way down to $3,000, all the way up to $12,000. You would have been all right in the long term. But if you're one of these people that loses interest right here with the general public here, and then the general public here in May, there's a reason that those people don't make money, and they're unsuccessful investors, or at least in the past have been unsuccessful investors. It's because they gain interest at the wrong time and they lose interest at the wrong time. So what we're trying to do here is to create an atmosphere where individual investors are able to accept the fact that you're never going to be able to buy the bottom, you're never going to be able to sell the top. That's why dollar cost averaging into and out of the market is, in my opinion, the best way to approach your investment future. Now, again, this is my opinion. It's not financial advice. You're free to do whatever you'd like with it. So that's it for this one, guys. Until next time, as usual, see you.